Good morning, everyone. I'm going to do another video here today. We're calling it when to get off the FOMO train, or when to know you've been infected with FOMO-itis. And for those of you who don't know the term FOMO, it means fear of missing out. Essentially, it means a chaser who buys stocks up massively. They won't touch them when they're low. They're all in when they're high. And that is a recipe for disaster more times than not. And the first one we're going to look at here is UAVS. Now, UAVS was a play that we have been swinging really since last November and December, waiting for that drone delivery news that they had promised in all their filings. And going into the update a week ago, we were positioned for the breakout move in this stock. Now, UAVS was one of my top two going into 2020 small cap penny plays for big moves. And the targets I was looking for when we were accumulating the stock in the 30 to 40, 50 cent range was I was looking for $1, then 2 plus, thinking that once we got that drone delivery news, the stock would take off. And, you know, with the virus doing what it has done, it's actually pushed the rollout of drones a lot quicker. But when this stock started its romp into the conference call, you will recall all the places where you should have taken profits off the table. Now, we were in right down here, and when it got over $1, we logically booked half our gains. Then the stock sold off a little bit, and then the next day really started to rocket. And you can see here, I ended up having us take some more profits at $1.50. Now, the FOMO-itis range came in here when this stock broke and started holding above $2. And it had given us many trades intraday on that. But the people who were chasing up here were the ones who wouldn't touch the stock down here. That is usually an indication of FOMO-itis. And again, the other thing we look for is a massive ramp in volume. As you can see, the volume just started ramping up there. 10 million, 20 million, 40 million shares. This zone up here, I had us book 90% of our gains at the 250 area, actually the day before it exploded. Whenever we play event plays, you don't play event plays into the actual event. You play the event plays right up into it. Now, doing that ensures a couple of things. A, it means you get the profits in your pocket. And B, it lets you not risk what tends to happen, the letdown, the sell the news. Remember, small cap stocks trade on speculation and anticipation. And when those events actually happen, it's the letdown. Ugh, that's it. Okay, out the door I go. Now, we sold a little bit early on UAVS 250, but we did keep, one of my favorite things to do is to keep a 10% position. We call it free shares. This is for the crazy that happens. And the crazy actually did happen, ended up running up to $5. We sold the crazy shares at 450 right before the event started, and then the implosion. And you've got guys buying here. Oh, well, this stock was at $5. You've got FOMO-itis. Oh, I'm buying down here. The stock was $5. And then, as you can see, it's slowly drifted lower. So charts like this, if you didn't want a stock at $1, why the heck are you buying it at $1.50, and why are you buying it at $5? Sometimes missing a trade is the best way to be, especially if you see, or in my room, and we're saying take profits. That should be an indication not to be chasing stocks like this up massive. The other example of this was, of course, MVIS last week. Now, MVIS was a swing play for us because it was looking to put itself up for sale, and we had gotten in around 25 to 27 cents and had a nice little pop up to 44 cents, which was our first target. And when we hit first target, we booked gains. Then it started to drift lower, and we were able to get back in at 27 to 28 cents. And the reason was, after we saw UAVS run massively into its conference call, MVIS had a similar conference call, and there was a lot of chatter about Microsoft. This is not new. MVIS and Microsoft have been tied at the hip with rumors for many years. A lot of MVIS ex-employees work for Microsoft. It's not a stretch. But the thing, as with UAVS, I was telling or saying that I was booking gains, and people were like, why? It's Amazon. I'm 99% sure going back to UAVS, that it's Amazon who is their delivery partner. But you must remember, these mega large companies sign NDAs with the small companies. So they don't want it out there who they are using. They don't want to be associated with small companies. So many times, even though these companies are working with these mega companies, they don't acknowledge it and don't let the small companies acknowledge it for a long time. That's probably the case here too with MVIS. But back to MVIS. So we got in 27, 28 cents, ran up to 53 cents. Now, this was a play simply, we had a reason and pennies were on fire. That's a 75%. Easy gains. And, you know, if you're a smart trader, you took some money off the table. The target on this one when we were playing it is we were looking for a move for 1+. So when it hits $1+, what do you think the logical thing to do is? It's to take some more profits off the table. And this is why we ended up booking 3/4 of our gains. Now, in after hours on this day, this stock was trading up at $1.40. $1.40 is FOMO range. This is where everyone now wants to buy it. They hate it at 30 cents. They hate it at 50 cents. They hate it at $1. Oh my God, this thing's going to 5. This is FOMO-itis range here. This is when you definitely should only have a really tiny piece of shares left. This is not where you should be buying a stock. This is where you should be going, wow, I made a great call. I got some shares left to see what the crazy does. And as you can see, it started to sell off, and then the FOMOs go, well, I'm not selling, it was $1.82. Well, I'm not selling, it was $1.50. Well, I'm not selling, it was $1.16. And lo and behold, you will have people looking around on Twitter that bought the stock up here that are still long down here. I mean, it's crazy. These are the same people that would not buy here but are buying here. Don't get lulled into FOMO-itis. You know, yes, if you sold here and you sold here and the stock goes here, you're going to go, man, look at all those profits I left on the table. Wrong way to approach trading. You should be looking at, man, I called a stock perfect. Look at the run this stock had. I got in at the right time. I took my money off the table. Yeehaw, win-win. Versus going, man, I sold here. I could have sold up here. Look at all that money I could have made. Hopes and dreams are not conducive to trading for many years in this market. So hopefully you guys will get a little indication here of identifying when you've got a case of FOMO-itis and when you know to take some gains off the table. For me, 25 to 50% move, I'm automatically taking half off the table. Always. I don't care where the stock goes. I don't care if it goes with $1,000 a share. Trade like a robot. Trade to the plan. It goes a little bit more, you take another quarter position off. If it starts going crazy, when stocks start going crazy, I like to go down to a 10% position. Essentially what that is, I don't care what the shares do. If it runs to 50 bucks, I've got some shares. If it comes all the way back down, means nothing. I've already booked big gains in my pocket. So that's my video on this one. Hopefully you guys can identify when you've caught FOMO-itis. The key about FOMO-itis is you want to be selling into these waves, not buying them. So any questions, just hit me up in the chat room and I will talk to you all later. Bye.